Hi there! I have good news for you and also bad news. Let's start with the good ones. Lucid got 1 billion to fund their operations, to expand their business, to come up with new models, and increase the revenue. And if that happens, you know what will happen to the stock price. It will go up a lot. Now, if you read more about this press release, you can see that Lucid got 1 billion from an investor, an investment company called Ayer, but Lucid got his money by issuing a new series of convertible preferred stock. What does it mean? Well, as I said, let's start with the good part. First, as they got this money, they will continue to invest for the long term. Lucid will continue to invest for the long term in their technology and their manufacturing capabilities. As they are saying, they remain focused on their growth via deliveries to deliver more cars, plus launching other great products such as Gravity SUV later this year. So this is good for Lucid, especially for the management, because they can fund their operations to inject more money into their business. And as you can see in their latest annual report, they had a loss of 3 billion. So as they got $1 billion, Lucid will be able to invest more in their business. As you can see, last year, their expense, research and development, were over 900 million. So with their new money, 1 billion, they can invest more in research and development. Plus, as you probably know, Lucid also has some cash on hand. They currently have 3.7 billion. Plus you add this 1 billion, Lucid will have in total more than 4.7 billion. So keep in mind this number, 4.7 billion. Of course, if you add the long-term investments, 400 million, that will be more than 5 billion in cash. Cash plus investments. And if you look at their market cap, you can see that is about 6.3 billion. So they have 5 billion in cash and investments, and the market cap is about 6.3 billion. So it's like the market cap is about the cash on hand. That's good. Now, you also have to be aware of their debt, because their long-term debt is about 2 billion. So from that 5 billion cash and investments, you subtract this debt, and Lucid will be left with 3 billion in cash. That's still good. Half of the market cap, which is now about 6.3 billion. Now, this is good that they got new money to fund their operations, 1 billion, from an investment company, and maybe Lucid will be able to attract new investors in the future, which can bring more money to their business and fund their operations. So the start is quite hard, because as you can see, the revenue is quite low. Last year, they made about 600 million in revenue, and their total costs was over 3.6 billion. That's why you see this loss from operations about 3 billion. So now at the beginning, Lucid needs a lot of money to fund their operations, to expand their business, and gain more market share. If they can succeed, then the stock price will do well in the future, and so investors. Now, let's see the bad part of these new funds. I mean this investment of 1 billion. As I said, Lucid created new convertible preferred shares. What does it mean? Well, if you read more about those convertible shares, you can see that the investment company who bought these preferred shares, Ayer for the investment company, they have an advantage over you, over common investors, because they can convert those shares into common stocks, common shares. So this investment company, Ayer, got 100,000 shares of convertible preferred stocks, but they can convert those shares into 278 million shares of common stock. So this is quite a lot, because this represents approximately 12% of the company issued and outstanding common stock. And the conversion price is about $3.5 per share. So, when the stock price gets above $3.5 or even more, it may go up to $10, $20, when that will happen, this investment company can convert these shares. That means they'll create new shares of about 278 million. And now, if you look at Lucid, the total shares outstanding, they are about 2 billion. This means that when that investment company converts its shares, the number of shares outstanding will increase to about 2.27 billion shares. And that means dilution for you. That's why you have to be very careful with this company. This is the bad side. Because as you can see in 2020, Lucid had about 700 million shares. And because they issue more shares to fund their operations as they have huge losses, the number of shares has increased from 700 million to over 2 billion. And this number will continue to grow more in the future. Because as you've seen, they got 1 billion in funds from an investment company. But the downside is that this investment company can convert its preferred shares, and those common shares will increase to about 10%. And of course, if Lucid decides to issue more shares, then this number can grow even more. That's why dilution is a big risk for investors, and you have to be aware of it, because as you can see, the number of shares went up quite a lot. But if you believe in the future of Lucid, that they'll be able to increase their revenue, to come up with new products, better cars, and reduce their losses, then this company might turn profitable, and so your investment, it may go up a lot. If Lucid makes some money, they become profitable. That can also happen. But as you can see, their performance so far wasn't that great, a decline over 72% from its IPO. Of course, if you had invested at the highest peak, your return wouldn't be that great, a decline of 95%. But maybe in the future the stock price can rebound again to have an increase of 400%. That may also happen if Lucid becomes profitable. So you have to follow their performance if they can increase the revenue, because as you can see, the revenue compared to 2022 has decreased from 608 million to 595 million. So this is bad for investors. And also their loss from operations has increased from 2.5 billion to 3 billion. That's why you have to track their performance to see if you can rely on their future growth. If they can grow and become profitable, your investment will do great in the future. So that's it for this video, and if you have other questions, please let me know in the comments.